Oh, man. Hell yeah. Hey, Johnny. How you doing, man? Did you end up selling that yin? Whoa. That could work. Not my particular flavor, but I see it. What's your average on that, buddy? You about to give back some profits, huh? You got it probably pretty early, so you can kind of ride it out. You gotta always sell into strength, you greedy bastard. Let me see this Tesla. Yeah, Tesla had the sales number out, and then, you know, the interesting thing with this is, of course, you know, you got, I believe is what, we can't really buy their BYD electric car. I forgot which random ticker it is, but they're getting their lunch eaten. Whoa, Lana, how you doing? Yeah, see, the other ones are going all nice and juicy. All right, good morning, everybody. What up? We got shit to do, you know? We got shit to do, you know? Cool. Abe, where you been? What's up, baby? What's up, man? It's good to see you. All right, man, let's go out and do the Lord's work, baby. It's Tuesday. It's Tootin' Tuesday today. Back in the day, when traders were men, they would be on Tuesdays doing cocaine on Wall Street before they started trading. Now we're drinking green teas and doing meditations. Times have changed. Byra, what's up, baby? Good. Hey, guys, let's make our moves here. So we got a small flat open. We got a small flat open on the Qs. This is actually the ideal open. If we had gapped up today, we would have probably had to take this bad boy down. But a nice light open, I think, is probably where we want to go with this. It has been a very nice 5-day run for the markets here, as we've kind of completely come into, you know, a little bit of what we call like a little W pattern, which is, you know, you get shredded down, you make a higher low, and then you start to come out of this range. And so now, you know, we're going to see if we can kind of come back into this suction zone. There is an incredible amount of supply in this zone because we've been distributing really since the 1st of March. And so you can see here, right, with the increase in volume during this time. So there's been, you know, the market's been distribution for quite some time. So now we're going to be into this real sweet spot if we can kind of come out of this today. And so I think that's probably the spot where, you know, if we get one more thrust, we can, you know, attempt for a little counter trend short, you know, as we get into the top of the range. But I will say the overall market, the structure of it is looking fairly bullish. You know, what we need to see is this kind of a dead cat bounce, or, you know, was this the W bottom? And so we'll see exactly how this kind of plays out. Once we start getting right up into this suction zone over here, then we'll know, right? Then we'll get a good idea of kind of what's going on. Let's just kind of take a look at it, some of the other sectors that are coming, because, you know, we did have some interesting things here, including some bottoming action in natural gas. Now, natural gas is pretty much unplayable. There's like 3 companies that even trade, you know, fairly well in natural gas. So not much we can do here. And now the solars are starting to peek its head here a little bit, but in the structure of like kind of the overall market, you're still in a downtrend unless you can kind of, if you can come out of this zone, then you've got a little bit more room, you know, up into the 200-day moving average. And we did get all sorts of kind of like, you know, we've had some news on tax credits and all that, but it hasn't really done anything. So, you know, the main hope for the solar market right now is just if the market starts flying, they're the only ones that are left that's cheap, right? So that's the main draw of all solar stocks is that they're the only ones left that haven't gone. So just something to kind of keep mind of here. But you're starting to see some of them look a little bit better here. You can see this run had a little bit of a pop, and now you got a nice little 2-day, right? 2-day flag going. And so you got a couple of these that are starting to hold up. You know, if you're looking for a cheapies, then, you know, maybe, possibly these. But the big hairy Indian butt is that they suck the trade right now. You know, they stink the trade right now. So you just want to kind of be mindful of that. Now, this is the big thing, you know, of I would say the big development as, you know, short-term traders of the last little bit is that the Chinese market has officially entered a base breakout and broke over the 200-day moving average, and even the bone zone is starting to really open up over here, indicating a really big spot of like trends starting to heat up. And it's been, you know, slowly trending for quite some time, but now we're starting to, now we got the speed up. And as day traders, like, we want to be a part of this speed up over here. So that is, I think, probably the best part about what's been happening in this last market bounce, because we're kind of running out of stocks to trade. There haven't been that many juicy McGee's of late. And now, you know, if we can get a little China, right? We can get a little China, then we're going to have some more fun here. So keep an eye on these. You know, I think probably one more down day on this, you know, and it'll set up for a nice bounce on these bad boys. In terms of the rest of the indexes, it's just range, right? So if you look at the IWM, IWM doesn't really mean shit anymore, you know, but the reason that, you know, kind of small caps have been moving a little bit cleaner, some of the mid caps, right? You've had a pretty decent thrust on the IWM. Now you're also back into supply on here. And so you'll have to be careful if you're trading a lot of small caps and you start to get back into this zone. That's usually, if you start to see, that's usually when the rugs start to happen. You might start to see like a little bit of fandazzlement. So just be kind of careful, you know, if you're trading a lot of small caps, because you also are at the top of the Bollinger Band over here, and you're pretty overbought. So, you know, we're probably due for a little bit of a pullback, you know, in the next couple days. You got 1 day, 2 day, 3 day, 4 days, 5 days at the top of the Bollinger Band. We could use a little bit of a pull. Even a couple sideways days would really kind of help the market marinate a little bit. And that's really what you want, right? Like, if you notice, especially on the IWM, pretty much every time you kind of come out of the upper Bollinger Band, you kind of come back down, right? If you come back out of the upper Bollinger Band, you come back down. You come out of the upper Bollinger Band, you come back down. So we're right at the top here. Ideally, you kind of rest and back and fill this zone here, and then you can kind of do that and let this open up. But what'll, you know, happen is that the traders get a little bit zesty, a little bit spicy coming into hump day, then, and you start to kind of peak out over here, then just like this time and this time and this time and this time, you'll have a, you know, a really wicked snapback. All right, you have a really wicked snapback. So just kind of be mindful of that as we go. But overall, hey man, we've been bullish and we've had a lot of stocks that have been kind of moving around, and the trading has been fairly clean, and it's been led by the semiconductors here. When you got the fake breakdown and now you've kind of remounted, you know, that's a pretty bullish sign. But this zone right here, this box right here, from 225. So keep it, you know, I would keep a chart of the SMH up while you're trading. You know, if you start to get into this box of love right here, then, you know, you're going to have quite some supply that you'll have to deal with, right, from all of this. And so we'll kind of keep mind of that. You're at 94 stochastics even, you know, if you're just measuring a simple overbought, oversold. So you're getting up into that kind of, right, that extreme level, at least on a 5-day basis, not a longer term basis. So something to kind of keep mind of too. I'd probably set some alerts on the SMH. If you start to get into 225 to 230, right, you start to kind of push into this. You know, I think you get, at least for a short-term trade, you get a nice little wicked snap back into this. So, a push into this zone of love and closer to that upper Bollinger Band that coincides with all this supply right here. And now we'll have some fun. Now, this setup is basically negated if we have a couple rest days. If we have a couple rest days and then we kind of thrust through, it would build up more steam to kind of push through. So just something to be mindful of as we go today. I think today is very tricky. Yesterday at the open, a lot of stocks just took off real hot, at the first candle. Today will be a little bit more tricky, but keep an eye on this. If you start to get into this 225, I just set alerts. You can draw out some trend lines too if you want. And then what you want to do is just change the colors on them so edit the colors on them so like they're starting to approach like some sweet spots. So like change this into, a little blue, extend it, and then you'll know like exactly how extended it's getting. So I'll kind of change these. So when I get into these kind of zones, as we start to get into it and the trading day starts to go on, like you start to know exactly where you're starting to roll through. Now, let's take a look. So we've got these indexes here. So the big thing is there's multiple things to look at. Number one is, what's the long-term picture? Well, the long-term picture looks fine, right? We're still in a bullish environment. What's the intermediate term, what's the intermediate term trend in picture? Well, the intermediate term trend in picture is that we're into this big range, and we've been in a range for quite some time, and so on an intermediate term basis, if you're looking at the QQQs, hold on, let me go back this way. If you're looking at the QQQs, right, the intermediate term picture is that we've been in a little bit of a range. The long-term picture, of course, it looks fantastic, right, because we've been in a trend for a big period of time. And then the short-term picture, right, and as day traders, that's, our main focus, even though we got to be aware of these other ones, on a short-term basis, we have an incredible amount of strength, but we're getting very overbought on a short-term basis as we come into supply. And so on a short-term basis, it's hot, but at resistance and overbought. Intermediate is, well, we've been in a distribution for a long period of time, about since March 1st, and then long-term, we're in the trend. And so we have these things that are in conflict with each other. And so when you have trends that are conflicting with each other, short, intermediate, long, all of the sudden, you can get into some weird choppy zones if you're not being very careful. Now, the beauty of what we have going on in the markets right now is that it's earnings season, right? And when you're in earnings season, dude, there's always something to do. So just kind of keep that in the back of your heads too. So let's go in and find out what the heck is going on today. Let's take a look at some of these earnings plays because there are some stocks that are pop-a-locking all day. So first of all, you got this NTC, MM Tech. Guys, small caps have been hot. They've been doing all sorts of stuff. Now, this M Tech is obviously, this is a pump and dump stock. If you could just see. Now, it doesn't matter if it's a pump and dump stock for most of you guys, right? As long as you're in first and not last, everything is good, right? Just like a gangbang. First, second, possibly, third. And if you're out of prison, fourth, but you don't want to be last. So you're coming in, right? Rug. And so this one has a chance. Like you got a huge base that's coming out of it, but you also are probably going to get rugged at some point. And that's just the game, right? If you're gonna dive into the weeds, as long as you're in first, you're good. And so when that happens, like what you really want to do, when you're trading like these kind of piggies, the first thrusts in the mornings are, fine. So like if you're looking and you're trading, whatever. What was that? Right, if you're coming in the morning thrusts, the first ones when the EMAs are all curling up, you're fine. But once it peaks out and they flatten out, if you're trying like all the bounces and all this kind of shit, then they're no good, right? And so you just want to be careful. You always want to be in the first push, but never the second or the third or the fourth. Leave them alone. Now, if you're just a man of honor, then you probably just won't you won't trade these anyways, right? Because you got other things going on. You got other things going on. So if you're a man of honor, then you wouldn't even need this. But I mean, there's so few of us, right? So let's go back. MTC, you could trade it, but you got to get rugged. Self, whoa, little storage company. This one is very illiquid, only 200,000 shares a day. TWKS, to a liquid. Old Peloton here is catching a bid. All right, so Old Peloton's catching a bid. They have some news out that, you know, people are looking to buy this out in the private equity market. You know, these kind of things, they can get played out. And, you know, at some point, somebody does come in when it's cheap enough. If you end up holding this for too long and somebody comes on and says, like, psych, right? Just kidding. Then they end up kind of crashing back. So, you know, if you're trading something like this, make sure it's just day trades. But I do think probably, you know, the way GME was acting on Friday, there's a chance that some of these bad boys actually do get picked up. You know, some of these cheapies. You may see this thing kind of roll into the fives or something like that. I'd add this, you know, for a little kind of flipping fun. Now check this out. This is old Zeta over here. So you got a whole host of upgrades on this bad boy. Zeta Global Holdings, loss narrows, revenues rise. Guys, in earnings season, you want to trade these stocks that are breaking out. So there's a couple different things that you're looking for, like on, you know, stocks that have earnings out. You know, number one, is it breaking out over levels that are clean, right? Are you clearing out levels of supply? You know, so obviously anytime stocks are breaking out of big ranges that go for, right, multiple years, that's a buenos. The second part is, you know, IPO stocks. So you can see this is a newer company. IPO stocks do tend to have a little bit more, they got a little bit more juice in them. And so like this thing's an IPO. It's a fairly low float, about 170 million. Like you can have something like this. That ain't so bad, right? You got a nice breakout. You got an IPO. Probably nobody's ever heard of this company, which usually ends up being a nice thing too, because all of a sudden people are starting to reevaluate it. I'd add something like that. Same thing with this Oscar, right? So this Oscar is a newer company from 2021. You know, you got the whole, right, kind of Nike swoosh pattern that's going on over here. And this one is starting to really clear out some levels too. And it is, you know, it's actually a decent mover. You know, it's a decent enough mover. So you got one test, two tests, three tests starting to come out of this range over here. This one is, man, these healthcare medical companies too. In general, when you're looking at stocks that have earnings out or PRs out, biotechs, tech, meditech, now AI, these will probably be the ones that usually have the best follow through. The ones with the worst follow through, banks, gold, retail, coal, right? These kind of things typically have the worst follow through. I'd add this Oscar. So obviously you don't want to hit this thing and just buy right off at the open, right? What you want to do is wait for some type of opening range breakout, or, you know, I prefer actually when you get one of these, like when they're up a little bit more than 10%, really the first pullback setup tends to be the best one. So you can do either or, you know, an opening range breakout or the first pullback, you know, to 9 or 20 EMA, something along that end. See if it starts to hold there and grind there. If it does, then you got yourself a really nice day trade. So add that bad boy. Hey, JMIA, what a blast from the past, dude. We've been trading this thing for years. But when this thing goes, it goes. So guys, this is the, you know, the Amazon of Nigeria. The Amazon is like the Amazon of Kenya, something along this end. And this thing, when it goes, it really can go. So it's got, I believe its earnings are out. It's got earnings out right now. They're probably horrendous, as they always are, but it's got a chance here. You know, it was just $8 just a couple months ago anyways. And so you got a nice kind of curls for the girls coming on this thing. I'd actually probably add this to the watch list for a day trade. See if it starts to hold. And if it starts to build over the VWAP, these little small caps, you got to kind of build them up over the VWAP a little bit. If it starts to hold over the VWAP, I think you might have a chance on this one. Hims has also got earnings out here. Now, it's opening up in a weird spot here because you got all this resistance on top. So these are not my favorite kind of openings. So it's going to be up 15%, but you also have all this supply on top. And so they tend to move a little bit more haphazard. Hey, Abe, I do have on some of my charts the fibs. I haven't used the momentum indicator. For the most part, you can just look at, price of stocks, but also it takes up too much space on my chart. But I do have on some of them the fibs up. I'm going to add this, but it needs to clear the 50-day moving average. There's a lot of stuff it needs to do. I'd give this a B-. See here, when it gapped up on earnings over here, see how clean it was? If you look left, right? See how clean it is? So what ends up happening is when you look left and you see it's clearing out all these levels, now the earnings play moves a lot cleaner because you are clearing levels of supply. And so what happens is you can get these really nice thrusts. In general, if you have earnings out, no matter how good they are, but you're coming into this zone of just supply, then you have a lot more booby traps that you have to trade around. Because you're sitting there and you've got a good pattern, but then it's running into the 50-day moving average. And you're like, do I do this? Do I not do this? Now, you're going to have yourself you got a lot more things to think about. And that's not ideal when you're trading. When you're trading, for the most part, you want to put yourself in situations where you can just grip it and rip it, which is why a lot of people like trading small caps or, low float stocks or whatever it might be, stocks with PRs out, because you don't got to think about all that stuff. You just are right. You just grip it and rip it. You close the eyes and do the stranger and you're in it. Hey, old Rivian over here. Little blast from the past. Old Rivian here. I believe Lucid's got its earnings out today too. Oh, let's see here. Hold on. Oh. Old Rivian, Apple, and Rivian are reportedly in talks for potential partnership. Had earlier halted its autonomous EV car system possibly of a certain EV startup, and Rivian is a very likely candidate. That just seems... I don't know if this holds up, but for the day, right? But for the night, this could. Well, I think we might, we add this for a little fun, but this is probably 99% likely bullshit, right? But somebody's got to come in, right? Somebody got to come in and say something. It's probably bullshit, but who are we to judge? I think we add that for now, and we're going to narrow down this list in a little bit, guys. But I like to get a broad list going, and then, we'll come back and we'll kind of chop it down into the faves. Ooh, junk. All right. Now let's look on the downside. Nuvo, dude, what a nice 20. Yosef, what's up, baby? Where you been? You in town still? Are you coming back in town or what? Boyo. Yeah, see this pump and dump junk. Hey, BYOed, Beyond. This is not Beyond Meat, but this is the old Overstock.com. Look at this bad boy. Right, you got a breakdown on this thing. You got pretty damn good range. Net loss widens. That's not a buenos. Revenue increases, but barely. Slam with what, baby? Give me the deets. I'll call you later. Give me the deets. This could be a bleeder. Well, I'm going to add this. The borrows might be, I'm not sure if it's easy to borrow or not. It usually is, but you never know. TDC, this is also, see how when you break down like this and you're clearing out these big ranges, that's what you really want to see on this bad boy. Let's add that to old Palantir. You know what Palantir kind of reminds me of? So it's a $50 billion company, and they probably fucking make no money anyways. But revenues rise, but commercial sales slow. Show sharp sequential. I'm thinking sequential means something not good, right? Don't know what sequential means, but it can't be good, right? Sharp sequential slowdown in U.S. commercial revenue growth. Hey, I'm sold, man. I'm sold. You know what kind of reminds me of, though? What's that damn other AI kind of stock? That was just a big bloated pig. Snow, right? Snow, it started breaking down its earnings. Nobody was expecting this kind of thing. And then it just kept bleeding off and bleeding off and bleeding off. It had been labeled as kind of an AI company, right? $50 billion market cap. And then it just faded the F off. I'm thinking this Palantir may be able to do something same. Now, the issue with Palantir is it's just a big, thick stock. This is a big, thick stock. So when you're day trading it, it's not going to give you like a dollar move. It kind of comes in like 34. It'll come in like 30, 40 cent batches just due to the price and the float. Yeah, but Lana, when'd you buy Snow, right? As long as it's not at 260, you're in a good spot. So let's add this bad boy. We got old Bird Dog over here, but it's sitting right at the 200-day moving average. I think that one will be a little bit tricky. Disney. Oh, I don't like to hear this. Star India deal charges weigh on stocks? No way the Indians mess you up. Boom, 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 boom. Yeah, this could be a bleeder too. Let's see how this one reacts here. It's not gapping down too much. Yeah, screw Disney anyways. Who wants to pay $500 to go to Disney World? In that kind of heat? Whew. Let's see here. You're clearing down a couple months worth of resistance. And then really, look, if you get down under this 106, that's where you got this gap here. And if this gap starts to fill down, then you're kind of really rolling into... Dude, you're rolling into some nice spots now. What do you think? Yeah, that's nice. Let's add this. That might be one of the cleaner ones. Mall. This thing's a pig. It's gone to zero. Well, it never goes to zero. They always do a 101 reverse split. It's technically only a 5-cent stock, but they did 100 to 1 reverse split. So it's really at 5 pennies. So it looks like it moved a lot, but it really moved from 2 pennies to 7 pennies. Then it came back down 4 pennies to 6 pennies. And then they're going to probably dilute it any day again. They get the volume up and then they dilute it. So maybe one more push before they kind of get this thing going. Chunk, 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 chunk. All right, cool. Let's take a look at just some. I think we got these earnings plays, but what we want to do is kind of narrow all this stuff down, right? So there's a handful of stocks I do like today that are just normal, right? Normal stocks here that we really need to be mindful of. I think this CCJ's got a nice look. If we can get a pullback on this bad boy, we get a little pullback on this one, we're going to have ourselves some fun on this thing. Just a little pullback on this one. You got a big flat top breakout on this thing. That's hot, right? So definitely want to do that. For those of you guys that like a little bit more of a mid-cap kind of name here, watch this 14 break. It's about 1380 on Zim. I think that's got a really, really interesting spot on it. SoundHound had about 50, 60 million shares in volume yesterday. You know, you probably got one more push into the sixes on this one. Not my particular flavor, but if you start to take out 535 and you kind of break over that previous day's high, I think you're going to be in for a nice move. Hey, this 183 on Qualcomm is right where the earnings high is. If you see a bid in SMH, you know, keep an eye on this bad boy. It's got a little spot on it. It's not like a sexy spot, but it's got a little spot for a day trade. You probably got a couple points out of this thing. Yeah, same thing with Google. You're right at a nice sweet spot on this bad boy, right? So you got 168, 50, about 170. If you start to kind of peek its head over this, you know, you're into a little bit of a release point that should take you down over 174, something along that end. So I like the overall look of that one. Let's take a look at SellH. A lot of people have been asking about this because the earnings are out. So it looks like, and it did it probably on almost no volume. So this is just an algo thing sometimes. You can see here. So the SellH, it had its earnings out and it dumped off. And it did it on about 100,000 shares in volume, right? So you can't put too much. What happens with some of these stocks that are a little bit thinner in the after hours, you know, it doesn't take much, right? Somebody's holding on to 50,000 shares, like, fuck, these earnings stink, and they dump it. And then, right, some other pro comes in and scoops them back up. So there is a shot that this thing's in play. Today, what we want to do is just make sure that we got ourselves a nice little doohickey over here. Ooh, I like it. See this? Like it's starting to push through. I'd add this. I just wouldn't chase make sure not to get crazy chase up on this. The last time it had earnings out, it did really a big day. It dipped off at the open, see this? And then had this real big power candle. So it dipped off at the open about 63 and then took off right into 82. So it does have a history of kind of selling off a little bit and then re-rolling back through. That's got a good spot on this thing. Yeah, I'm not sure if Tesla does it much today. If it goes red to green today, then that's going to be really bullish on it. Oh, yeah, baby. Hold on here. Hey, that's pretty good. Guys, we're still creeping up on the market here, so just kind of be mindful. I think we probably, if we have one big shove off today, probably at some point in the afternoon, we roll for a hot second. Wow. Yeah, you got UAL also. You got a little UAL action. I like the overall look of this. It came out of the swing trade entry was yesterday. But I think you can still keep day trading this. If it kind of breaks this 55, you're going to be good. Now, let's kind of narrow this shit down a little bit here. So out of the earnings plays, we got old Zeta here. I would add Zeta to the list. Not a 6 windows priority, so you want to narrow them down to 6. And then put the side pieces on a different list, right? So you want to just narrow them down a little bit here. I think we want to put this Oscar on. Right, we got JMIA. Dude, Rivian. Man, Rivian, damn, this motherfucker could get going. All right. I think we want to add Rivian too. It's going to be a fluffy PR, but it's... I'll leave all this shit alone. Qualcomm only over 183. This MU's got a lot of heat. It had a $150 upgrade yesterday. If it takes out previous day's high, and oftentimes they're doing them on the first candle, keep an eye on that. NVIDIA's also got a spot. Its earnings are at 522. Most likely, like, this thing is going to come in and make a little bit of an earnings push, I would suspect. I'd just be aware of this kind of top of the Bollinger Band too. You don't want to buy into that. Let it kind of extend out a little bit. I would suspect before earnings come, it's going to kind of try to test the top of the ranges. So you want to really look. Any kind of big dips on this bad boy, any kind of intraday pulls, and if you see heat off right off the bat, say you get a power candle off at the open and you go red to green, then you want to come in and hit the first dips on it. It tends to work. NVIDIA almost always works on the first pullback. You know, when you get the power move at the open, that first pullback tends to just get you a nice shred on it. So keep all of these, you know, on the watch list. MU, Qualcomm, NVIDIA for semis. And then we've got some nice, right, earnings plays out here too. I would do anything. And this one is, you know, a little bit more speculative. Good. Man, we got to do the Lord's work today, baby. Ooh. Yeah, I do like this RBK, whoever just asked that. It needs to get over 35. Might be a little bit, I would say probably a little herky-jerky for most people because it's not a big volume play. And this too. Out of all like the kind of just regular stocks, this one's got the best, right? Just like a nice little flag on it. Oh boy. Rivian, Oscar. Little Oscar Mayer. Who doesn't like a little Oscar Mayer? Hey, Colin, what's up, baby? How you doing? This could work. Not my ideal type of play because it just trades a little bit thin, but the setup is there. You know what? I would agree. Mara's been doing a lot of red to green. Mara's getting added into that small cap index, S&P 600. Probably worth a goose and a gander. All right, man. Let's go do this. Let's have some fun today.